7 money mistakes that I think every woman should avoid. The first one is making your partner your financial plan. Even if your relationship is good and you're in a healthy relationship, or your partner is very well off, they're making a lot of money, it still doesn't matter. Making your partner your financial plan is not a good idea. And so many women have experienced the negative end of this. And it's not only in the case of if the relationship breaks down, there's other things that can happen in life, such as death, sickness, and if your partner is the sole breadwinner and you don't have any systems in place, should anything happen, your household is going to be left unprotected, and financially you're most likely going to be the one to struggle. So looking at things like insurance, income protection for your partner if they're the sole breadwinner, all of those things are really important. It's all well and good when you're healthy and everything's going well, but it's also important to be wise and to think about what could happen should the worst happen, right? And it's just about being ahead of those things. I've seen stories of so many women who were stay-at-home moms where the relationship broke down and financially they were left desolate. And I'm not saying as a stay-at-home mom that's going to happen to everyone. Of course, that's not the case. But it's important to have something in place should the worst happens, whether that looks like divorce, death, sickness, or life just happens. The second one is getting into an unhealthy relationship with credit. It's so easy for us to do this. We're constantly marketed at as women. There's so many different things that are pushed at us, and it's easy for us to fall into those traps, to overspend and build an unhealthy relationship with credit, whether that looks like using things like buy now, pay later, way more than you should be doing, constantly living in a cycle of overdraft. It is very, very easy to do this. And it's all well and good when things are seemingly going well, but all it takes if you are living in a cycle of living on credit is for something to happen, whether that's being made redundant, losing your source of income, and then you quickly realize how unaffordable some of those lifestyle habits that you had were. Credit is not bad. It's all about learning how to use it in a responsible way, in a way that's actually going to build your credit, help you to save money. In some cases, it can if you use it wisely. And just being a savvy consumer, not someone who's a victim of consumerism. The third one is one that's really, really close to my heart, and that is about retirement. So many women put their retirement on hold. It's not something they think of. It's left on the back burner. And unfortunately, in retirement, women tend to retire with significantly less pension savings than men do. And there's so many different reasons for this. Women typically take time out to have children, and all those years where you're not working, you're not contributing to a pension is obviously going to have an effect on how much pension you are going to accrue over your working life. So it's really important to, if you're not already doing so, to start saving towards your retirement. That can simply just be opting into your workplace pension, increasing your contributions if you're able to do so, and really just being savvy with your money. If you are planning to have children, I think it's important to have that conversation with your partner as to what that's going to look like when it comes to planning for your retirement. If you're taking time out to look after your children and to put your career on hold, or even if you decide to be a stay-at-home mom fully, that time that you are spending with your child is valuable. And also, while you may not be contributing financially to your household, you technically are, because you're saving money on childcare and all the other things you would have to spend money on if you were still working. And so it's important for you to have discussions with your partner about planning for your retirement, what that's going to look like. But one thing I would really strongly urge you, especially if you are deciding to be a stay-at-home mom or you're going to take some time out to have children, is think about what that's going to look like for your retirement and what small things you can put in place to enable you to start saving towards your retirement. Guys, it is so hot. Fan break. The fourth thing, I'm really getting into your business on this one, and this is about saving. Constantly dipping into your savings. This is a mistake to avoid. I know it's so tempting. I've been there where I have dipped in and out of my saving because I've overspent, or there's something that I want to buy and I'm like, I'll just take it out and I'll put it back next month. But the problem is when you're constantly doing that in a cycle of dipping into your savings, a lot of the times when you do say, I'm going to put it back next month, what happens is you put it back that month, but then the following month you end up taking out even more, and the cycle continues. And before you realize it, you're saving a lot less money than you actually intended to. It's really important when it comes to your savings to be disciplined. It's not easy, and there's always going to be something to buy, but a lot of the times there's only going to be limited sources of income to actually save. One thing that definitely helps to be more disciplined is having clear goals for your saving. If you're simply saving for the sake of saving, it's going to be very easy for you to dip into those savings. But when you are clear about what you're actually saving towards, what it is that you want to buy, what that savings means to you, it's so much easier for you to then resist the temptations to dip in and out of your savings account. And if you say, Peter K, I don't even know what to save for, as a starting point, save for an emergency. One thing that's guaranteed in life is that there is going to be an emergency, whether it's a family emergency, work emergency, a life crisis emergency. It could even look like saving for a career break. Maybe that's something you've always wanted to do, but you don't have the finances to enable you to do that. And so building up your savings, building up reserves, that's going to enable you to have that career break that you want to have for 2 to 3 months or whatever that looks like. And if you know that you just don't have the willpower right now, there are savings accounts that have restrictions in the sense that you can't easily access them. You need to give a certain period of notice in order to get money out. And that can range from 7 days, 30 days, 60 days, 90 days, and even beyond. So that is a notice savings account. If you live outside of the UK, it might have a slightly different name, but also it will be a similar concept. And typically those type of accounts tend to offer higher rates of interest, again, because of the incentive of locking that money away and not being able to tap into it easily. The fifth mistake also relates to savings, but it's the opposite. It is only saving and avoiding investing. There are so many women that are great savers. They are saving their money, they're stacking that money up, but they are not thinking about inflation. They are not thinking about ways to grow their money. And I know investing comes with risk. And if anyone tells you there's no risk, they are lying to you, and it's probably a scam. When it comes to investing, it's all about exploring your options, looking at the different types of investments and what aligns with your level of risk. There are certain types of investments such as bonds or even investing into ETFs, index funds, that are a lot less riskier than simply just investing in individual stocks or things like cryptocurrency. Again, they all carry a level of risk, but it's about diversifying what you are investing in. And like I said, aligning what you invest in with your risk profile. I'll talk about that in a separate video. But what I really want to encourage women to do is investing for the long term. We're not talking about day trading, doing things for the short term. Thinking about the long term, especially if your risk appetite is a little bit low or a little bit more cautious when it comes to investing. But remember, if you are only saving, one of those factors that are going to work against you is inflation. Because if the value of your savings is not growing beyond inflation, the value of your money is decreasing. The sixth mistake is not being proactive when it comes to learning how to manage your money better. Things are constantly changing, and what you knew about money 10, 15 years ago may not apply to today. Society is changing, the way that we bank changes, the way that we manage our money changes, taxation laws are constantly changing. In essence, things are always changing, and with those changes, you need to be keeping up to date. Because failing to do so is going to cost you money. You're going to miss out on opportunities that you potentially could tap into if you are keeping yourself up to date. And it doesn't mean you need to be a serial investor, a complete finance expert, but just knowing the basics. Budgeting your money, knowing your numbers, knowing where your money is going, having financial goals and actively working towards them, and keeping up to date with what's happening in your economy and the taxation and economic laws within the country you live in. And the seventh mistake is relationships. Failing to discuss financial matters soon. So many people delay having conversations about money when it comes to the relationship, or they just talk about the surface level things. What do you earn? How much do you earn? No, you need to be learning, how much do you spend? Do you have any debt? Who do you owe? What are the things that are important to you when it comes to your money? Is it experiences? Is it saving? Is it building wealth? Is it simply just having a simple life? So understanding the things that are important to you and to your partner, understanding if they have any debt, understanding where their money is going, what their goals are, and does that align with your goals? Even understanding how finances was for them growing up. What were some of the things they learned from their family? What was their money situation? Because a lot of those things can impact on how we navigate our finances as adults. So really understanding where your partner's coming from, what they've learned, and maybe things that they're now unlearning as an adult is really important. So don't avoid having conversations about money. I know it can be awkward. I know it can be a source of contention, especially if you have opposing views when it comes to money, but have the conversations and have them as soon as possible. And also make it a continual thing. Build a culture in your relationship where you talk about money, where it's not an awkward thing. And in the beginning, it may always lead to an argument or a disagreement, but keep coming back to those conversations because it's really going to help you to strengthen your relationship and also to help you and your partner to get on the same page. These are the 7 mistakes that I think every woman should avoid when it comes to money. And also, just to add on the last one, do not lend money that you cannot afford to get back. Because in relationships, I've seen this also where women have loaned their partner money, the relationship breaks down, and that man does not give the money back. And then you're out of pocket. So, really being wise with the financial decisions you make. Avoid taking things out on credit for your partner. If they've got bad credit, that's something for you to be mindful of, and do not put yourself in a position that's going to damage your finances. So these are the 7 money mistakes that I think that every woman should avoid. I hope you've enjoyed today's video. Leave a comment below of mistakes that you think women should avoid. If you agreed or disagreed with any of the ones that I shared, I'd love to know your thoughts. And if you haven't already, don't forget to like and subscribe to my channel, and I'll see you in my next video.